Let's talk about finding and correcting errors by looking at an example. Suppose check number 1000, the disbursement to South County Superior Court on January 30th, 2024, on behalf of client R&W Development, was listed as $320 in your bank statement. However, you recorded it as $230 in your account journal and client ledger. Transposing numbers is a common bookkeeping error. More than likely the error was in your records, not the bank's. However, you should look at the copy of the canceled check to be sure. You review the canceled check copy included with your bank statement and see that it confirms the amount of the check was $320, which is the amount the bank recorded in the bank statement, not the $230 you recorded in both your account journal and your client ledger. Remember, when you find an error, you will not remove the incorrect entry. Rather, you'll make adjusting entries to correct the error so that you can maintain the integrity of your account journal and individual ledgers. This requires a two-step process of entering a reversal of the incorrect entry and adding a new correct entry into your records on the date you perform the reconciliation. To demonstrate, let's say you are completing February 2024's reconciliation on March 5th, 2024. The transaction you are correcting was recorded on January 30th, 2024, when the check was disbursed. You had incorrectly recorded the amount of the check disbursement as $230 instead of the correct amount of $320 in both your account journal and the client's ledger. To correct this error, the first corrective entry you will make will reverse the original incorrect entry by adding the incorrect amount of $230 as a deposit in a new line item you enter on March 5th, 2024, with the same payee and check number and client information. You will state in the notes column that this is a reversed incorrect entry. In the reconciled to bank statement column, you can now mark the original entry as incorrect and the adjusting entry as adjustment. Since neither transaction can be reconciled to the bank statement, you have noted how both entries were accounted for in the reconciliation process. The second corrective entry you will make will be to enter the correct amount of $320 as a disbursement in a new line item with the same information. In the notes column for this line item you will state corrected amount. The new correct entry will be marked as reconciled to the bank statement. You will also need to correct R&W's client ledger, because you also incorrectly recorded check number 1000 in that record. You will make the same two adjusting entries to reverse and correct the amount. Then, you will mark the reconciliation column in the same manner. It is also important to assess whether the error you found caused any unintentional misappropriation. When you look at R&W Development's client ledger, you see the running balance was $24,770 at the time you made the error. The error caused R&W's ledger to be overstated by $90. At no point during the month did the client's balance fall below $90, which means the client had available funds in trust to cover the mistake. What if the client's available funds dropped below the amount of the mistake, which in this example is $90? In that scenario, you would have misappropriated another client's funds, which you must address immediately by documenting the finding and correction and replacing the missing funds. Correcting adjustments must be applied globally throughout the reconciliation process, including each document that is being reconciled and each section of the reconciliation form. If you make correcting adjustments to either the account journal or the client ledger, those adjustments will affect the client ledger summary, which reflects the running balances as of the date of your reconciliation. This means you will need to update the client ledger summary with the total balance worksheet and adjust the totals for Section 1 and Section 2 of the reconciliation form. When all three sections of the reconciliation form match using corrected totals, your bookkeeping errors have been identified and corrected.